Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today we'll take a look at the euro currency again, so we will follow a tradition when we have prepared the weekly research for one currency and following within the week with another one. As it was on last week when we prepared the weekly research on the Great British Pound and talked on the euro currency whole week, and here again, so the weekly research was dedicated to the cable, and right now we have to return back to discussion of the euro currency, since we see some interesting moments here that need to be discussed. So on the daily time frame chart, in fact euro right now stands between the two fires. The first fire is the possible is the Fed meeting, when it's really could be the information that Fed will not be hasty with the rate hiking. That is supportive factor for the euro currency, while another fire that is really more significant is the turmoil around the Greek debt. So as you know, the 7 current billions should be paid out in the May till the 11th of the May to the IMF from the Greece to not fall in the default. In the June, Greece has to pay approximately the 20 billions dollars or euros, so that will be really a heavy burden for the Greece economy. That's why this concern and this problem stands in the focus right now in the European Union. And many investors right now starts talking that the technical agreements and the discussions could happen, but sooner or later it's probably the strategically Greece still will fall in the default. It's really very high probability. That's why as you can see that the euro currency mostly stands flat and moves shyly, so it's not really big action recently on the euro currency. From the technical point of view, the situation remains the same on the daily time frame chart. When our short-term setup has failed, recall that what we have said here, that if market will continue to move lower, this will be probably action to the 103. But here market has failed to do this and turn to the upside, and our short-term setup based on the bearish grabber here has failed. But at the same time, market has not erased the daily bearish setup. So here the setup is still bearish because butterfly is still valid. It will be destroyed only if market will take it out of this top and move above the 618 resistance as well. Second, here it's not quite clear what we will get. Potentially we have two possible patterns here. The first one is the butterfly sell that could reach the monthly pivot resistance one and erase this butterfly, and that will be probably the breaking of the daily bearish sentiment, bearish setup, because the butterfly itself here will not mean that market will reverse down from here. It could show even higher retracement, so market could react, for example, with some small retracement to retest this broken top and continue to move higher. That will be sufficient to treat this butterfly as as valid, as worked nice. That's why I think that the butterfly could be just the beginning of the possible deeper upside retracement. So it will, if it will start to work, it will mean that in the short-term perspective on the daily time frame chart, we have to be ready for a deeper retracement. And the second pattern that could be formed here is the guarded 222 sell. So this thrust down, ABCD retracement. So if market will stop here around 110 even area, so daily overbought as well, and turn to the downside, the major bearish setup here will hold, and this pattern will be just a deeper retracement, but not the breaking of the short-term bearish sentiment. That's why it's very important for your currency what pattern will be formed from the technical point of view, because there is really just a huge difference between them in relation for the action. On the 4-hour time frame chart, guys, currently we could see the signs of the possible reversal from the 110. So we could confirm based on the technical picture on the 4-hour time frame chart the second pattern, I mean the 222 sell, but we can't see any signs yet that the butterfly should start to work. It doesn't mean that it will not work, but the signs could appear a bit later. But right now, we do not see them. So what we see is that ABCD target, this is the same ABCD as here, this one, has the completion point right at 110 area. And this point has the confirmation from the reversal pattern. It's butterfly, 1618 butterfly stance. Okay, we think that market should proceed right to the 1618 target, because take a look, we see the acceleration candle right to the 127 target. And when market shows such sort of action, in it really the high probability that market will continue to the next target, to the 1618. When you see acceleration during the butterfly, within the butterfly right to the target, it means that market hardly will stop here and probably will continue to move higher. As you can see, that will be the nice resistance cluster. Daily overbought, weekly pivot resistance 1, ABCD target, and the target of the butterfly. Also guys, if you take a look at the hourly chart, you'll see that we here also could get the minor butterflies, smaller one. It's 1618, also stands at 109.50, 109.60, approximately at the same 110 area. I do not know guys where we will get here, for example, free drive. This also could be, for example, if market will turn up right from there, we could get 1618 free drive. You can see, right, so as you can see, it's 1618 here. It's not quite corresponds with the ratios of the three drives. Anyway, at least we have here another pattern. It really also confirms this area. So guys, if you are searching for taking the short-term bearish position, the 110 area is not really the worst choice, because when the market will hit it, if even market will continue move up later, probably it will respond on this area by some meaningful retracement, and that retracement will let you move your stop to the break-even. For example, if you take the position, will stop, place the stop somewhere above daily overbought, and when the market will start to respect of this area by some retracement, you could move your stop to the break-even and watch the movie. What will happen if market will really turn down with this guard 222, you will get the perfect trade. If you will be wrong and market will continue to move higher with the daily butterfly, well, that's also will be acceptable, since you will lose nothing in this case. That's why we think that the 110 area is not bad choice for taking the short positions 110, because it will be highly protected. You will be able to place very tight stop, and as this really will be significant resistance, you will be able to move your stop to the break-even, because at least some minor retracement out from this area should happen. So that's our short-term view on the euro currency. In fact, currently from the 110 area will depend, if you could call it, the destiny of the euro currency in the short-term period. The 110 area will show whether the market will turn bearish again and will continue move to the 103, or it will break the short-term bearish sentiment and we should be ready and take the position with the deeper retracement on the daily and maybe on the weekly chart as well.